All right, wanted to make a little live video lesson on BDTX just so that you understand how to use the SSS in determining should you make a trade or should you not. It's going to be interesting over the next few minutes because BDTX looks like it might actually crack below $5 a share, and it'll be cool to see, why I'm not interested in it right now at 514. But if it does crack low, to the high fours where I think there's going to be support, I might dip by it. So for this, we're going to use the trader checklist calculator. As you might know, 7 indicators. It's not a perfect science. Don't think like this works every time. It's really just to get you thinking about the right way to, consider a stock before you risk your hard-earned money. Too many people just buy a stock randomly. Oh, good news, let me buy. Oh, good chart, let me buy. And you don't really think about the other things. And, it's pretty crazy. I kind of pulled this out of my ass. This whole, 7 indicators, I kind of like reverse engineered what I think about. But I'm pretty happy with the fact that it works so well. And there's different weightings given to, different indicators. But it just should help you understand, like, when should you trade? When should you not be in a trade? So BDTX is a giant big percent gainer, so I'm already interested in it. From yesterday, 2 to 4 on the news of positive FDA news with their phase 1 clinical trials, potential cancer cure. Obviously, cancer is terrible. It's not all cancers, but, any kind of innovation in cancer therapy can be huge. But phase 1 is just the beginning. It's a long, long path to actually getting FDA approval. But it did spike. It doubled, which was impressive. And a lot of short sellers were saying, it's so early. This stock never really holds its gain. So they started to short here. And that's what opened up this short squeeze, I think. I called it pretty nicely. If you go back in the chat yesterday, I really thought that it could spike. I didn't know that it was going to be a big short squeeze, but this is a pattern that has been working well lately. You really want to buy the high of the day breakout, ideally. In any short squeeze. It's tough to just buy anything when it's already up too much, when it's not a convincing breakout. As you see here, it tried to break 1, 2, 3, 4, 5 times in the sixes, and it couldn't. It was just up too much. And it's really tough to just dip by, any gradual downtrending. You want either the quick spikes or the quick panics. So right now, as I'm filming this, the stock is 510 by 512, 16 million shares traded in the first 90 minutes. So it's liquid. It's volatile, but I'm not getting the true panic that I want. And it's not a huge surprise because I think this is just a short squeeze. So let's dig into this. What is the pattern in the price? Right now, it's roughly $5 a share. I like that. My sweet spot is $2, $3, $4, $5 stocks. I really just judge them well, and I try to make like 30, 50 cents a share on my trades. So it's the right price, but what is the pattern? It's not a real big morning panic like I like. It's really like gradual downtrending and very choppy. So if I were to explore this 1 out of 20, it's the right price, definitely $5 a share. It's the wrong pattern. Okay. I like morning panics. I like morning spikes. Neither of those. So I'll give this a 10 out of 20, split the difference. Risk reward. This is where if you were to buy the stock, what would be the upside? What would be the downside? How do you judge? Obviously it's all an estimate. You don't know what the stock is going to do, but you can judge based on recent key indicators and action. So right now, if I were to buy it at 514 and I'm thinking that this is going to bounce, what would be the upside? You always have to think, what is the potential upside? Why even risk your hard-earned money? It tried to bounce in here in the 530s and it failed, 1, 2, 3, 4, 5 times it tried. So you can say 540 is resistance. So if I were to buy it here at 510, 512-ish, you really got to believe that 540 is not going to break. So roughly 27, 28 cents a share of upside. Downside, it's tough. It's tough to judge. It's already down 17%. You know that there's probably going to be a lot of stop losses at $5 a share. If those stop losses get taken out, it's going to drop pretty quickly. There should be some support here at 460. Normally I say cut losses quickly, but when you're buying a stock just above a support zone like $5 a share, where a lot of newbies are using their stop losses right at 5, it can drop very fast. This thing can spike very fast and it can drop very fast at specific levels. So if it does crack 5, normally I would say, just cut losses and 10 cents a share of downside. Wrong. What if it cracks 5, and we might even see it live here? It probably will drop from 5 to like 480, like that. And you won't necessarily be able to cut losses. So if you were to buy it here at 510, you got to figure there's 30 cents of downside. Just if you want to get out, even, if you're just trying to buy a few thousand shares, because it's going to drop so quickly if it does crack 5. And again, we're coming up on this. This might be a pretty well-timed video. 30 cents of downside and roughly 30 cents of upside. So the risk reward is 1-to-1. That's not very good. Normally, risk reward, I want 5-to-1, 6-to-1, 10-to-1. Sometimes like 3 or 4-to-1, depending on the situation. But where it can literally just drop so quickly, and it's like getting your legs taken out, I wouldn't be able to cut losses quick enough. 30 cents of downside, 30 cents of upside, 1-to-1 risk reward. It's not terrible. There's still some potential upside, and it doesn't necessarily have to crack 5. Like there might be some big bidders here on the level 2. I don't know. Sometimes they hide their size, but it's not great. So I'll give this a 7 out of 20. Ease of entry and exit. This is a very liquid stock. It's traded 16 million shares in the first 90 minutes. The spread you can see is 508 by 509. So the spread is only 1 cent a share. It's perfectly liquid, maybe even a little too liquid for my taste. But again, because those stop losses are at such a key level just below here, it doesn't matter what the spread is. Like in 1 or 2 seconds, and we might see it live again here, you might see a 30 cent a share drop in like 1 or 2 seconds. So that is very concerning if you were to dip buy. So I theoretically could get out, but I don't know how quickly I can get out. So we literally might see a panic here. And I wanted to see a panic right at the open. If this were at the open, I would be much more excited right now, because then, you would theoretically have a stop losses going off at 5, and you could get a big 20, 30, 40% panic near the open, which I do like to dip buy. But right now I'm filming this around 11 a.m. and it doesn't look like it's a true panic. Oh, look at this. You see look at all the time in sales. Someone's bidding big, but they're just getting eaten away. Shorts are clearly in control today. We're coming right up on the precipice at $5 a share. Let's see if it can crack. Looks like 502 is holding so far. See a big wall of buyers. Nice little uptick right there. They're going to try to break the shorts. These are all short sellers right now. They're trying to crack it below 5. See, now they tease like the bounce, and then they attack again. It's a battle here. 502, 503, now 501. Ooh, baby, we're going to get a crack. But I don't want to bet on a crack. I don't want to dip buy. I'm just watching. I'm observing. And you'll understand if I had finished the checklist before this key level. Oh, they're defending 5. This is like if you're playing chess. Like this is the queen. Okay, this is checkmate if 5 cracks. So I have to interrupt my video lesson right now just because this is going to be amazing. Well, let's see how fast it can drop. Oh, come on, crack it. Here we go. Nice. It's been a while since we've gotten a live video. Look at all the sellers. This is a wall of sellers. Short sellers are feeling, they're, smelling blood. There's blood in the waters. Oh, but 5 is holding so far. Nope, gone. 499. So now these are stop losses. Oh, look at that. So the stop losses, and this sometimes happens. People thought that there were a lot of stop losses at 5. I thought that there were a lot of stop losses at 5, but not so much. And it looks like the longs might be able to, bounce this. Not enough for me to go either way. It's 11 a.m. Like I really don't want to trade this, but it's always interesting at a key level. So it did break 5. So now theoretically, the stop losses have gotten taken out. So theoretically it can bounce more, but sometimes it goes back and forth and there's really just no upside or downside. I mean, that was kind of a weak crack and now it's a weak bounce. Very typical of like 11 a.m. action. I really wish that was at the market open. If this were at the market open, if this were like 9:35 or 9:40 a.m., I'd probably be long right now because, it took out the stop losses and then it could bounce. But right now, it's just a gradual downtrend. So far, they held off the crack of 5, but, nothing much more. Anyways, no trade for me right now. Ease of entry and exit. So now, it's actually interesting because I thought that if it cracked 5, it could drop 20 or 30 cents a share. So that thesis is now busted because it did crack 5 and it didn't drop much. So now we're seeing like this gradual downtrend, bounces a little, downtrends a little, really just not tradable. But ease of entry and exit, I was going to rate this low because I thought that it would be really tough to get out. or get in, very quickly if it was moving so fast. Now the bounce actually looks to be on a little bit. Theoretically, I should dip by this, but I've got a busy day. I don't really want to buy at 11 a.m., and that goes into the personal schedule. But ease of entry and exit, I'll give this actually an 8 out of 10. Before that crack of 5, I would have given it a 5 out of 10. So the price action is teaching me how can I get in or out. Past performance history of spiking. Yesterday was a great spike. It was a squeeze. So that makes me interested that it can still squeeze because we know short sellers are in this. But at the same time, you got to look at 100 days. It never really had a big spike. Over 200 days, never really had a big spike. Over a year, never really had a big one-day spike. Over 2 years. So it doesn't have a good history of spiking. And this is frankly why short sellers are interested. Look at this. This is a nice little bounce here. Surprising. I wanted a bigger panic and didn't get it. Still nothing like great. It's only like a bounce of like 15 cents a share, but still better than what I thought. So history is spiking. In the past, it's bad. Yesterday was good. So I'll give it a 5 out of 10. What time is it? So this is what matters really for me right now, 11 a.m. I've got a crazy action-packed day. I've got a big lunch to go to in an hour, so I can't sit here and just watch it. Like I said, right now, my thesis has changed. I think that it's probably just going to go back and forth. I can't do anything, right? Like I don't really want to be in a trade for more than a few minutes because I have to get going. I'll give this a 5 out of 20. Reason catalyst is a short squeeze. This has been the biggest spiker these days. It can still squeeze. I think a lot of shorts were just surprised that it couldn't crack 5. I'll give this a 7 out of 10. I'm not great at short squeezes. They're very inexact. The market environment is amazing right now. We're seeing a lot of big spikers. Anyways, so total value of this potential trade, if I were to buy this, and I started the video lesson at 5:15, it's right now at 5:15, but we learned something when it cracked 5. A lot of my assumptions that it could drop more were busted when it cracked 5 and it didn't. But long story short, it's a 52 out of 100. Not very good. So this was, you can put the price. This was at $5.15. What I wanted to happen, this is why I would have dip bought it. Let's say, let's play hypotheticals. Let's say that it cracked $5 a share and it went to support here at 457, call it 460. So if it had cracked 5 and dropped really hard, let's say it got down to, I don't know, let's say it got down to 460, but it would be a quick, let's say I bought at 470. So now I'm buying into a panic. It might not be a morning panic at the open, but it's a panic and, it's still in the right spot. So I wouldn't give it a 20 out of 20 because I like morning panics near the open, but I'll give it a 15 out of 20. If it had dropped to 470, remember, this is just hypothetical, it didn't do it. Here at 470, I would be happy dip buying it near support at, call it 460. Obviously, if you're dip buying a panic, you don't want to just try to catch a falling knife. It could keep falling. But if I'm buying it into a giant panic from 5 down to 470, my risk is it drops to 460, maybe 450. Call it like 20 cents of downside. But what sometimes happens is if you get a panic below a key level like 5 and it goes to 470, it goes right back to 5. And then the shorts are scared because they're like, oh, damn. And, to some degree, shorts are scared right now. Like we're seeing a 20 cent a share bounce. But if it had gone down to 470, it could have easily still bounced to 520. So 50 cents of upside, call it 20 cents of downside, 2.5 to 1 risk reward. Still not great, but much better than before. 15 out of 20. Ease of entry and exit, same exact stock, same exact ease of entry and exit. Past performance history of spiking, same example. What time is it? Again, let's say it had cracked 470 there and I still have a busy schedule. I have to leave in like an hour. Personal schedule is still the same. So 5 out of 20. Reason catalyst is still the same and the market environment is still the same. But notice it's now a 65 instead of a 52. I still want to take trades that are a 70 out of 100, so it's still not a gimme. But if it did crack that key level of 5, then I'm buying into a panic. I'm getting, theoretically what is a good deal, and I'm much more comfortable. And the main difference is that I'm getting in at a better pattern, a panic pattern as opposed to just a gradual downtrending. And the risk reward has totally changed. Because here at 5:15, you don't know if you can get out below $5 a share very quickly. As it turned out, my fears were not warranted. But here at 470, you wouldn't have that fear of a big drop because it's already dropped pretty big. Obviously, trying to catch a falling knife, it could still fall more, but a lot of stop losses would be at $5 a share. That would have been the key catalyst to break below. And now look at this. That actually was the low so far. Now we're bouncing 20 cents a share. But again, not the right pattern for me. Didn't get the true panic, not the right time of day. So this is what I do, and I'm judging a whole bunch of different variables, not an exact science. The variables can change based on the price action, based on other plays. Like if other plays start spiking, then you might say, oh, if other plays that are similar start spiking, this might spike. Rising tide lifts all boats. But this is how I judge it. In every trade should, whether you do this in your head or whether you use the calculator, it should really help you. So hopefully you like this. Hopefully you learn how to use the calculator and you make better, more meticulously planned trades. Thank you.